and welcome to the next episode of the 2022 predictions. This is going to be a long form episode. It's almost an hour long. We go into heavy detail. We have a special guest, Steven from the Discord. You've probably met him before. I'll go ahead and let you get into the video, but please like and subscribe. Leave a comment down below. What's your favorite stock heading into 2022? We'd love to hear about it. And remember, we got one more episode on the way, so I'll catch you then. But go ahead and enjoy the content. We did this live in the Discord. Alrighty, what's up everyone? So we are going to go ahead and go over the funds heading into 2022. This is going to be, now I manage multiple accounts. This is going to be an aggressive innovation fund that I'm going to measure against the S&P index as my benchmark. I'm going to try to beat the S&P. I'll do, I don't know how often, I'll probably do quarterly updates on YouTube publicly. Inside the Discord for contenders, I will do monthly updates for them. And so if you want to head over to the Discord and get constant updates on how I manage these long-term funds, which is a little bit different than the option trading I usually do, you can go check that out there. And actually today we have a special guest who's also going to go over his long-term. This is someone who's been under my wing and learning this for several years. He's done really well, and so I'm really proud of him. Steven, you want to go ahead and say hi?
What's up, everybody? I'll be helping Josh out with this. Our accounts might have some overlapping positions, but yeah, we're both just trying to beat the S&P 500. Let's get into it.
Yeah, and I'm super excited about him doing this with us. So this should be a ton of fun. We'll go ahead and hop right in here. So right now I'm live streaming through the Discord. We're going to go into long holdings, and I'm going to highlight this main post right here. And I guess I'll go ahead and kick it off. So I got the Mara position. You might see here I have the Mara. And then I also have the HUT here, so I'm doubled down. I've actually got about 11% inside the cryptocurrencies. I'm really bullish on the cryptocurrencies. I do plan to allocate out of this position if we get a nice rally early into next year. Probably will allocate some out as well, bring it down to maybe like a 5% total if we do see some sort of downturn. But my outlook's really bullish. I really want a lot of exposure to crypto. And I'm excited about those positions. I decided to kind of split between the two because Mara is typically selling out of the cryptocurrencies, but they're the largest miner right now and the market's favorite. I don't like to argue with the market. HUT, though, likes to hold their cryptocurrency. I think they have a really good management team, and I think their forward-looking growth looks strong as well. I also like the different energy alternatives that they're using. So go ahead. Which one you want to go over?
I'll pick my second largest holding right now is Snapchat. And Snapchat, they haven't been doing too hot with their past earnings. They're sitting around like $48 a share right now. But like we saw from the earnings report, they're experiencing very strong user base growth. Which, I mean, in general, in the end, that's where you want to put your money because they have access to those people. And that's also like my biggest metaverse play right now. I think with their AR technology, they have some of the best capability to show off the potential and really get the metaverse and people interacting with the metaverse like more than what you would usually see with like headsets and whatnot. So eventually when this recovers, because I strongly think it will, I'll lessen exposure and diversify into other tech, but I'm very happy holding Snapchat right now.
Yeah, I like Snapchat a lot too. And actually, yeah, I definitely have, I hold some. I'm actually going to delete this so it's not confusing to people because this was a early update. Okay. My second largest, well, my tied largest holding is Disney. Now, actually, I'm going to go ahead and cover Disney and Meta. So, Disney does not exist in the Meta portfolio, but I think that they still might play a role in the metaverse, a big role in my opinion, because I expect them to also enter the NFT market. I also think that they're going to be a dominant player in streaming. I think I expect us to leave this epidemic mindset and hit more of an endemic mindset, and that means that people probably are going to be more likely to come out. I expect variants to continue to not be that dangerous. I'm not subscribing to as much fear as most people. So I think the theme parks will come back. I think the streaming will be dominant. The stock's really cheap right now. I like having a major exposure to Disney. And then Meta. Meta is a portfolio that tracks a lot of the companies that are in the metaverse, and I really like the diversification in Meta. I really like the companies in that portfolio, and that is balanced quarterly, so I'll have to keep track of that as well to make sure that my allocations are not being too overexposed from different things that already exist within Meta. Now you might see another position down here, Roblox. Roblox is in the Meta ETF, but I wanted extra exposure to that because I expected to outperform most of the other stocks within the Meta portfolio, and I would like to get extra exposure from that.
Yeah, tagging on to what you said about Disney, I have seen there are a lot of Marvel NFTs coming out right now. I know there's like some Spider-Man comic book NFTs.
Yeah.
I expect those to gain a lot of traction. And also, I mean, they've been raising the prices of tickets for their parks for years, and people still keep buying it. So I think that's a really strong hold. I definitely want to get exposure to that as well.
Yeah, I'm super happy about it. All right, you're up to bat.
Alrighty, so the next one, I'm going to let you go over CRISPR because I know you have way more about that, but I do hold it. Next one I'll talk about is VLD. This is a company that recently IPO'd, and of the recent IPOs, there's been a lot of weakness, but this is one that has really stood out to me. It's probably the biggest industry leader for 3D printing. They can make parts that no other 3D printers are capable of producing. They're the only ones that can meet the demands for the designs of SpaceX and other aerospace manufacturers. And the company is expecting to see 100% year-over-year growth for the next 5 years. So, I mean, whenever you have a company that has a moat as large as this, and they can just do stuff that no one else can, I mean, they're going to gain traction. I think this is going to be a winner.
Yeah, I mean, you just sold me on
it. In the sector.
Yeah.
Sorry?
I was strong. You just sold me on it. That was good.
Yeah.
All right, so coming down to our 6.7 allocation with Udemy, and it's also worth mentioning the 3.1. So I almost got 10%, and I consider these to be very, very similar plays. Universities are dying. A lot of them are probably going to go out of business over the next few years. A lot of them already have. I expect a lot of student loan forgiveness, and I expect a lot of those programs to be pulled back a little bit because of the major issues that it caused. And so what's occurring, I think, alongside that, that's really was triggered in COVID, is people are starting to realize the utility of this online education, how they can get certifications, how they can still get the same knowledge base that they would get at a college, but pay way less, potentially get way more knowledge, and that one-on-one feel. And so Udemy is amazing for that. I think that, we've seen some rockiness and their growth. They had that huge spike during COVID, but I think with the stock's priced right now, in my expectation of how the sector will continue, I actually think that maybe major tech companies might start partnering with these different online services so that they can get more specific training in their industry. I also expect that a lot of these top professors at universities will likely leave their colleges and prefer to work on a platform like Udemy or Chegg. Udemy, there's some professors on there that are making over $1 million. Teacher became one of the top 5 jobs to make you a millionaire, and this is how they're doing it. So I expect as the greatest professors start to go to the platform, they will then get more students that follow, because that's going to be the natural relationship you see. And I expect these to start becoming more commonly named brand companies. I expect them to beat their growth expectations, and with the further degradation of the university dominance in education, because I just feel that that's just become outdated and too slow. It's not keeping up. Technology moves too fast for the university to be the best way for you to get this knowledge, and it's keeping up with the changing times. So
yeah, it's about time that there's a disruption in that industry.
Yeah, you're bad.
Alrighty. Next up, going down as far as what I have most weighted is Hims. Company is Hims and Hers. That's another recent IPO. This is my aggressive telehealth play. So ever since the COVID lockdowns, telehealth really got brought into the limelight as for like why you don't need to go to the doctor for everything. You know, I mean, there's like with technology right now, you can do a Zoom call or just anything. You can call your doctor and get a prescription just setting up over to you. So Hims, they offer prescriptions for skin care, hair care, mental health, like anxiety, stress, and depression, and also offer sexual health medicines. Their user growth is growing very steadily. They have a subscription-based model. It's exploded to 93% this last year, and their user base is 70% Gen X or younger. So the people that are using the service, they're going to be around for a while. I mean, they're not they won't be dying off anytime soon, and yeah, I just think this is a pretty good company that has a lot of room for the upside.
Yeah, I agree. Yeah, I
All
like the
right.
healthcare sector as well. All right, so
Mm-hmm.
hop down here. We got CRISPR, and also I also have ArcG down here as well. I
I have
am,
ArcG2.
yeah, I'm a little skittish of the ARC funds. I do wonder about the restrictions that Kathy has and her flexibility and how she might manage some volatility heading into next year. Nonetheless, I expect biotech to when I look at the biotech stocks, they look so undervalued. So this is another like Meta where I wanted the double exposure to Roblox, which I thought would be an outperformer in the fund. I have this large amount of exposure to CRISPR. Because I expect it to outperform ArcG. I think ArcG's underinvested in CRISPR. I think they're overinvested in stocks that I'm not really a big fan of, but I do like the overall exposure to the fund, and I do like that it's actively managed, and so that means that I can kind of cover the sector, kind of lean on some of their expertise because it's so hard to follow all the rapid changes that occur in biotechnology and to keep up with the cryptocurrency and the metaverse. So I rather take some of that exposure, say, okay, you've got a full team. They seem pretty proficient. Overall, I'm not totally opposed to some of the choices they've made, but I want that extra exposure to CRISPR. CRISPR is solving some of the biggest problems in the world right now. I mean, they're getting close to even resolving type 2 diabetes. They are, their technology's been used to cure sickle cell disease. There's so many applications for this. That it's endless. Now, the big thing that I'm going to be kind of mindful of heading into next year is kind of looking for some conversations around regulation in this space. I do think that is going to be the number one thing that we're going to have to start worrying about. However, I think that with so much going on in the world and with so many things at play at once, it kind of is been put to the back seat, and so if it continues to be put to the back seat, we continue to see these massive innovations. And I'm very bullish on these companies and on their outlook. Right now, CRISPR does carry a lot of debt, as do a lot of the biotechnology companies. However, fundamentally, what this science provides, what this technology offers us, I just don't consider really the debt right now, because once this technology can reach the cost efficiency to get mass adoption, the money they'll make is just it makes the current debt negligible, in my opinion. I'm very bullish. I expect aggressive growth in research, and I expect massive speculation in this sector as the markets become more and more aware of how game-changing this technology is. Like, everyone's focused on cryptocurrencies, everyone's focused on cybersecurity, everyone's focused on what's happening in real estate or the supply chains, and slowly biotech is just solving some of the biggest health problems that have been traumatizing humanity since existence. And so, I'm not being dramatic about it. It really is that game changing. So I want a good amount of exposure to those. So, all right, on to you, Stephen.
Yeah. Alrighty. Looks like I skipped one actually. U. So this is my uranium play. I also have some other uranium ETFs that I have in my Roth IRA. But I mean, we've talked about this before, and you've talked about this before in other videos. I mean, the energy crisis is very blatantly rearing its head right now, and uranium is one of the best options we really have to really start combating this in a clean manner that everyone's so concerned about. And the U.S. is really kind of behind the ball as far as like uranium and nuclear energy goes. Like France, they're killing it with nuclear energy. Like I think 70% of their power is directly supplied via nuclear energy, and China is making like 10 new nuclear power plants. Isn't that right?
Yeah, there's
So
expectations to build even more, way more.
yeah,
Yeah.
so whenever the U.S. kind of figures out that like we need to stop treating this thing as something we need to be scared of and embracing the innovation that has occurred in this industry, I think uranium is bound for an explosion. I've
Yeah.
been holding uranium for a little bit now. I've been adding to it. It's been performing very well, and yeah, I think hopefully we can see some more changes in, as far as how we view uranium and nuclear energy in the year to come.
Yeah, it gets rid of some of that litigation, stopping growth.
Yes,
Yeah, and so
yes, yes.
and just if you're watching this, we also go through our video history. We also have I did a full deep dive into uranium and my forward outlooks for that as well. So you can watch it as well. All right, so I'm not going to go over URA. URA is a Uranium ETF. Stephen just mentioned that. So we'll go to GGBI. This is Polestar. There's no Tesla. I own no Tesla yet heading into 2022. I'm concerned about whether I'm concerned about whether we will really get the performance that I want to see out of Tesla heading into 2022. My goal is to outperform the S&P. The S&P is Tesla and Amazon and just the main stocks. So when I'm looking at EV evaluations, Rivian, I hate Rivian. I think Rivian is way overvalued. I'm actually short on Rivian right now. I'm not impressed with Lucid right now. I think they also have major issues. But when I look at Polestar, we have a whole different game. So Polestar is backed by China and is backed by Europe. So we've got two big things there. They're automatically connected to the best supply chains, China. They're getting support from the two second biggest EV players. And they're both incentivized to make sure this company succeeds. Right there, and they make good vehicles. So and they have prior partnerships as well. So I am extremely bullish on this company. I think the stock is really undervalued right now. And so when I'm thinking about who's going to give me the most growth, who's going to give me the best returns, GM, Ford, they don't really stand out to me right now. Tesla, I love Tesla. I love Elon. I really do. I just don't know if I'm going to see the performance out of that stock that I want comparative to the rest of these performers. Now, I guess I'll go say, as you see right here, I would like some more Google exposure in this fund, and I will likely, as if we get some nice appreciation out of Mara and out of Hut, I'll likely slowly allocate out of these a little bit because I already have crypto holdings as well, and I'll shift some of that out likely into Google and Tesla. Now, we'll do quarterly reviews on this, so we'll see how the environment plays out, how well a lot of these theories play out, and then kind of play it from there. But right now, from my viewpoint, when I'm looking at evaluations, when I'm looking at will give me good returns, Polestar looks like a really great option right now.
Okay. Next up for me, we have Airbnb. I've been holding Airbnb pretty much since it IPO'd, probably about a year ago, right?
Yeah,
a little over a year ago.
Yeah, that's all right.
Yeah. So Airbnb they have such a great fundamental business model. Their management team has been killing it too, especially whenever COVID lockdowns were really given the whole premise of going out and renting places, of like kind of put a whole halt on that. They were what did they do exactly? I think they just helped make sure that their the people that were offering their homes out, they could be able to take care of them, and they even took pay cuts in the management levels to keep
Yeah,
keep
they
things
were.
afloat and
They
make
were.
sure that their business would still float. Airbnb is what we like to call has a flywheel model in their business. So they provide the platform for people to rent out their homes or their properties, and people can rent them out, and it can expand as much as people adopt it without the management team really having to be involved as much, as long as they have a good platform open. And if you've used Airbnb, you know what a great value it is. And really, as things start reopening too, we're going to see even stronger growth coming out of this company.
Yeah, yeah. As that travel comes back, I agree. And
Hmm.
all of that is the exact reason why I also hold some Airbnb as well. You can see that right here. And I guess go ahead. Micron Technology. Now, Micron on their last earnings announced a lot of tech innovations. I don't want to kind of get derailed to the new technology and get just to get stuck in some technicals on there, because we're just kind of going over portfolio allocations. So just the effects of that, though, that I expect, and why I'm holding a good portion of this in the fund, is because I expect this company to now have a moat that no one will reach for probably the next 5 years. And that dominance, I believe, will be massive as the need for these technology is going to continue to ramp up. So we're seeing a lot of the supply chains get fixed. Micron Technology, actually in general, has been pretty strong on the supply chains. They're an American-based company as well. Also, most of their production is domestic, although they are opening more plants as well. So I'm super bullish. I think they're going to be very dominant. I get no exposure to them through Meta, so I want to make sure I carve out a spot for them in my portfolio. And I guess I'll also add that another big fellow holder of Micron Technology is currently Nancy Pelosi, and we know how our favorite insider trader does. So, all right,
Yeah,
off to you,
she's
Steven.
she's killing it.
Yeah.
Next up for me, we have Hibbett Sports. Um, so this is the first retail play I have. I really like this brand. If you look up their website, it is phenomenal. Like you go to any other retail clothing website, and it's just not very clean. But this one, they really have a really strong e-commerce platform to start things off. Their sales have been going crazy over the past few years. Um, they've just been reporting really strong earnings. They have they're trying to actively keep their locations opening in growing areas and closing them down in areas where growth is stagnating. So they're just actively trying to move into where the growing population areas are in the states, and that's something that I feel like a lot of business retail clothing sector companies, I should say, they have a lot of issue with. Like you see American Eagles and dying malls all over the country, but you'll only see these where there's projected to be high growth. And according to their last earnings report, their supply chain issues, amidst supply chain issues, their inventories have actually improved, and they were really well set up to go into this holiday season. So, I mean, with one of those companies that you see really strong growth coming in, it's one of those things that's hard to ignore. And yeah,
Nice. All right.
so back to
Sweet.
you.
Yeah. So we got some Apple, 4.4% Apple. I mean, I didn't even know if this really even warrants an explanation. It's Apple. It's hard not to put Apple in a portfolio. It's basically like holding SPY. Um, I think that we could start to see Apple turn into more of a blue chip company. I am holding a good portion of Apple because I expect some volatility in the beginning of the year. If the market turns more bullish, I'll actually probably drop this. Holding Apple to me is kind of like holding cash. Um, cash that doesn't slowly depreciate to inflation, because Apple stock just tends to keep up, and it's just a solid performer. It's blue chip tech to me, so super happy with having a portion of that in there.
Hmm.
And
I'm really curious to see where Apple goes with their AR technology they're working
yeah,
on right now. I mean,
yeah,
we know how Apple is with releasing products. It'll probably take a little bit, but I mean, they really could bring metaverse to the public like way better than Facebook can. I mean, it's Apple. Apple products sell, and also their electric cars. I'm looking forward to that too.
Yeah, that should be pretty interesting. Yeah.
Yeah.
I expect them just to
So
continue to be a solid performer.
yeah, me too. I mean, it's Apple, right?
Right.
Next up in mine, we have FXLV. This is F45. This is another smaller company. I do have some experience working with this one. This is it's a fitness brand. It's comparable to CrossFit type workouts. Basically, it's HIIT training, which is high intensity interval training, and it is basically just like really high volume, really high cardio, and they are a franchise that has been opening up studios all over the country. I have taken these courses before, and they work really well. They actually have their own technology associated with them, where they have a heart rate tracker that you put on for each workout, and then it syncs to a system in the gym, and it shows how hard you're working for each workout, and it kind of gives you like a nice community feel when you're working out with people, and you can see how hard they're all working, and gives you more motivation as well, in my opinion. So I really like F45 just from my personal experience with them. They've been making some great partnerships over the past few months. They have partnered with, I think Carnival Cruise Lines, Carnival or Royal Caribbean. You have to forgive me. I don't know which one. And also Norwegian Cruise Lines. Now, if cruise lines survive in the future, I don't know. But I mean, they'll definitely get some exposure to people that are on cruise lines. So they're going to see like, oh, I saw that gym on my cruise. Maybe I'll go check it out. I think that's a pretty cool thing. They also just had a recent partnership with a massive country club chain that has like I think 14,000 different country clubs throughout the country to put their studios inside those country clubs. So I think, yeah, that's amazing too. And also, they're starting to get ties with the U.S. military. So the Army right now, especially, which what makes this intriguing to me, the Army is revamping its whole PT test, and it has been significantly hard to adopt because it has been a little too challenging for a lot of soldiers to be able to pass. So Mark Wahlberg, he's really big into F45. He talked to all of the generals in charge of all the branches, and they all love the program. There's one open on a Marine base in California right now, I believe, and their goal is to put an F45 on every base in the world, and that's like 280 bases. And they also offer some great services for veterans and everything like that. Overall, F45 has been, it looks like a really solid setup to be an emerging fitness brand that will have a significant role in the market. And also, CEOs are buying back funds and hedge funds are buying it up too. So, yeah, I really like F45.
Yeah, that's a great one.
Okay.
Yeah, those are some really good DD. So you covered
Yes, sir.
Airbnb, Doximity, Docs.
Yeah.
This is this is technically MindMed is also considered a healthcare stock, but this is a social media healthcare exposure. Doximity is a social media service that is mainly used by people in the medical industry, mostly by doctors. This company has shown great growth. It's consistently beat expectations. I think currently the price range of the company puts it in a great position to be a buyout opportunity. So I'm expecting this to not only perform well, but I'm also expecting some buyout potential there as well, or maybe different, or a partnership or a merger could occur. I really like the actual adoption of this company, and it's being used, and the network feature of it is so much more efficient than the built-in applications that are used for like Teladoc, and we're seeing it perform a lot better as well. So I like having some allocation into this company. I especially think that a lot of the other healthcare companies, or maybe even someone like Microsoft, wants to pick them up when it comes to when they start building out their own healthcare. So I think this is going to continue to be a great performer in the industry, and I don't have a lot of direct exposure to other funds like Steven does with HIMS, but I do like this because there's not a lot of overhead, there's not a lot of fear, they don't have to worry about supply chain issues. You could see some drop off in advertisements, but when it comes to advertising, when you're on a platform, and when you're thinking about what companies are looking for when they want to invest, you are and into what audience they want, attention they want to grab, whose attention, whatever, that made sense, I think. And so, if you want to get a hold of doctors, you advertise on Doximity. It's as simple as that. It's not like, oh, Facebook, can you do this manipulation to make sure this group of people sees my ads, and how do I know that that group of people is seeing these ads? You know who you're advertising to. You know who your audience is. And the number one thing that's frustrating with doctors is they are horrible at adopting new technologies. But that makes me more bullish on Doximity. This company has continued to beat growth expectations over and over and over, which means that if you're getting this subset of people to actually adopt this and use it, I think it will just continue to ramp up. You know, the ease of use is clearly evidenced, yeah.
I totally agree.
Yeah.
I right now I work with like a lot of doctors in my second job I have, and I asked them like, hey, have you heard of this company Doximity? And they're all like, yeah, I use it all the time to look up colleagues, kind of reference people, see their resumes and stuff like that. And also I'll just go into this right now. I also own eDoc. That's a telehealth ETF. And I kind of already went into why telehealth is something that I think has a lot of room to grow with HIMSS. So there's not really in the sector, there's no standout leader right now. So that's why I'm deciding to keep a nice chunk of exposure in an ETF for it.
Awesome. And so coming down here to MindMed. I'm going to go ahead and cover MindMed, CGC, and YOLO all together. So all three of these companies, MindMed is a long-term holder that I've had in most of my funds, actually. I've invested in this company since before their NASDAQ listing. My background is in biotechnology and biochemistry, so I did a lot of research with nootropics, which then led me to psychedelics, which then led me to becoming well informed on the cannabis industry and the psychedelic industry. MindMed there are a lot of recreational LSD and mushroom companies. I probably shouldn't say it like that, but LSD and psilocybin companies that, you know, it's more of like the fun party, like, you know, we're just gonna, you know, keep this. I'm sorry, I have a kitten at my door that is going nuts because my door is closed, so I'm gonna go ahead and open that real quick. So MindMed in particular is going for a more legitimate legal side of things. They want to get FDA approval. They want to be a medicine. They do some of the most research in the world at their company. They have the most patents in the industry as well, which I am super pumped about, because when you think about the actual property that the company owns, these patents are great. They're doing things like removing the actual visual effects of psychedelics to help treat PTSD, and they're having amazing results. And their addiction applications having amazing results. They're helping fix depression and helping people with ADHD and just a lot of neurological disorders. There's lots of different applications for this medicine or drug or whatever you want to call it, regardless of what you call it. The research is there. I'm a scientist. I like the research. I like the data. It looks amazing to me. I think it's better for the world and better for people. So I think also the push, why I want to hold this into 2022, is because I'm expecting a big push from the bipartisan agreement and the legalization of marijuana. I think once that occurs, you could see more decriminalization of psychedelics. We've already seen some decriminalization of these psychedelics, whether it's Colorado or Texas, or I think Washington even as well. So, and I expect that trend to continue as we, have this big push in understanding and more this big skepticism of big pharma, and this more trust and understanding in the applications of natural medicine. It's less of a, ooh, you're such a hippie. It's more of like, this is has real purpose and application, and is non-addictive and not harmful. Alcohol is still exponentially more dangerous than almost any of the other drugs that are illegal. So you can die from alcohol withdrawals. You can't die even from methamphetamine or heroin withdrawals. And yet we have the most deaths in alcohol over any other drug. Yet we continue to demonize lots of different things. Now, I'm not advocating for meth or heroin. I'm just trying to, always trying to continually debunk a lot of the misinformation that exists in people's understandings of drugs. And I'm not advocating for their use, or I'm just simply trying to be informative about it. So, off to you, Stephen.
Right on. I will also add that I do have positions in MindMed and other cannabis plays. I have positions in Weed Maps, Tilray, Canopy Growth, and I also have YOLO in my Roth. I think once we get that cultural shift to get these things on a level that society doesn't view them as like taboo anymore, we're going to see a lot of growth. We talk about this a lot in the Discord, so feel free to come and join in and hear our crazy takes on that and how it could change the world. But going down next in my portfolio, we have GPS, Gap. So Gap has not been getting a lot of love lately, but this is my Kanye play. Anyone that doesn't know, this has been going on for a while now. This isn't new news by any means, but Kanye has collaborated with Gap to use them as the provider to bring out his Yeezy line of clothing, and I think Kanye has the clout to carry them and get them out of where they're at right now and really kind of rejuvenate their brand. I mean, if you look at what happened to Adidas stock after they partnered with Kanye, it since that date, they have risen 123%. Now, you can't use past to
Past performance is not
to indicate the future.
Performance.
Right, exactly. But I mean, I do think there's a correlation there. So, I think I don't know. I trust in Kanye on this one. That's what it comes down to.
Well, I like Kanye as well. And we played that stock at COVID and got amazing returns off of it. Did really well.
Mm-hmm.
Yeah.
Mm-hmm.
So covered that. Palantir. Palantir and apps are my speculative technology investments. I think apps is which is Digital Turbine. I think they're a rapidly growing company. I think they benefited massively off the changes that Apple had to make. I think Apple will probably be under more fire as well on their application-based apps. Mainly partner with Google, and they've had really solid growth. I really like the price point of the company. I do have a pretty set exit on this position though as well, and it will probably need a little bit more management than the other ones because this environment is so rapidly changing and currently under so much litigation pressure. Google is under substantially less pressure than Apple, but it doesn't mean that in the future we're going to see more issues. The European constituents and or government officials in particular, or European regulators in particular, really like to pick on Google as well. A lot more than the Americans do, so that's something to be mindful of. And then Palantir, you can only invest in Palantir for your technical understanding of them to a certain extent. This company is pretty quiet on what really makes them so special. However, I like having a small position in this company because I like the talent pool that exists in them. I think they have consistently been improving on their business skills as well as their technical skills. I also I'm hopeful about the expansion of the retail side of the business, which I would really see pushed a lot more. They mainly function off of government federal contracts. Obviously, this is a very competitive these are going to be very competitive contracts, and that could easily be a risk that this company has to take on, is that they get outcompeted for those contracts. However, I do think that they hold a pretty good moat with their technology. At least that's what the appearance is. Now, without any deeper understanding on the technical side, and that information is just not available. That's not like a lack of research on my part. I think they are doing an amazing job of marketing. When you look at the clients they have, they get amazing reviews. Their stickiness is strong. The set of problems that they claim to be able to resolve and the level of efficiency that they claim to have over their competition is represented in the performance that they have with their existing client base, and then that continues to persist. I think this company has massive growth potential. I also think the market right now is being extremely punishing to them. They're being treated like a technology company that doesn't make money. This is a profitable company with state-of-the-art software technology, or what they would probably not deem as software, as they're a big, death of software type of advocates. They use more AI and self-learning technology. So, and I also think that they're going to be a major player in resolving some more supply chain issues and helping develop new supply chains. And I expect them to continue to have strong dominance. Off to you, Steve.
Awesome. Alrighty. Next up, this is something I added recently, but after doing some research, I decided to add the Hack ETF to my portfolio. So this is a cybersecurity play, and I think as society continually becomes more and more digitized, there are only going to become more and more nefarious attacks on the cyberspace. So I think that the need for cybersecurity to improve is there. And I mean, just look at what happened back in 2021. We had the Keystone Pipeline attack. We had the SolarWind attack, and so the industry is going to just only increase more as technology increases more. So I really think cybersecurity is going to be really strong going into next year. Try to minimize some of the potential for some of these hacks that have had devastating effects on our country. And yeah. So the other thing about cybersecurity right now is we don't really see an industry leader at this point. So because of that, I just want to get really broad exposure to all of it. And hopefully when an industry leader does come available, I would like to invest in them directly. But it's really hard to get into this sector without having a very, very strong knowledge of cybersecurity, which I don't have. So for right now, I'll just hold the ETF.
Right.
And yep, back to you.
All right, so I'm gonna cover. We already covered Roblox, so we got Hippo and DATS, and there's a low allocations in these, and these types of exposure are not covered in any of the other stocks. So why such a low allocation to these two penny stocks, and why hold penny stocks? I think Hippo is probably one of the most undervalued stocks on the market right now. They are a technology insurance company that currently mostly operates in home sales. I used to work extensively in the insurance industry from multiple angles, for car, home, auto. Well, why did I just blank so much? Every type of insurance I've worked in, I'm still licensed in. Every kind of work, small business, home, auto, life, and why am I? Disability. Jeez. So, I've worked with Hippo. I actually have used their software, the internal software, and their bottom line is really good because they're a technology company. The pricing of the insurance is fair. They give you lots of write-offs. You get great benefits as the company expands. I think that trend will continue. Insurance companies are also highly efficient with their money, so I don't expect them to have much issues when it comes to, whatever economic turmoil is going on. Insurance will always be a need. Insurance companies are, some of the greatest managers of money as well, because they're getting consistent returns to the money that you give them to help with to generate the revenue. They kind of act like banks. So I like having that small allocation. I want a nice tail end. So like when I'm looking at my bigger exposures, these are the bigger companies that I like, and then on my tail end, I want some performers that could do really, really well. If these stocks run really hard, I will sell into the run-ups as they run up. I won't let these become, if Hippo runs up to the extent that it suddenly is 5% of my portfolio, I will definitely sell half of that, and keep it low. So these are my, small plays that I'm expecting to perform. DAX is a little bit different. DAX is a social media company that is built on the blockchain. I am hopeful that the public sentiment for the need to protect our data will become stronger, and that companies like DATS will start to get more exposure. Now, the big thing with social media companies is they want to make money off advertisements. The big issue with DATS is that you're not going to want to advertise on a company when you can't get any verification on what demographic you're reaching to when you are advertising on them. So advertisers right now like to have the feedback that they're getting certain eyeballs focused on their products. Now, personally, I think that's stupid. I'm very opinionated on that. I think the showing people what they already look for is probably the absolute dumbest thing the dumbest marketing idea anyone's ever had. Pretty much since the inception of marketing. I find that to be one of the most irritating things that is a boomer mentality. I feel like boomers think like that. Like, oh, they bought a basketball. Maybe they want 7 more. It's like, you're kind of just like a greedy dummy. Probably linger on that too much. I think it's really stupid though. So maybe once, a lot of those practices are getting pushed back actually, because people are starting to realize like, hey, it's kind of dumb that we do that. It's always been dumb that we do that. So maybe when that gets pushed back, we actually do see DATS be able to get some advertisers, and then they don't have to rely on the subscription, which I think this, if your value of your company, actually, the great way to put it is that if you don't pay for something, then you're the product, and so DATS doesn't have people as a product, so people then have to pay the subscription fee. However, when you have a paywall or anything, you're going to limit your growth, but you're a social media company, and so growth of user base is exactly what you're looking for. So they limit the free features that go with that application, and they're relying on that a subscription feature to get the additional use. However, if you don't pay for it, it's still just basically like a Twitter with just a much smaller user base. That to me is concerning. Now, we look at Metcalfe's law, which is what we would use to evaluate a social media company. It still ranks pretty well, surprisingly. But the issue is that you still need the people to actually subscribe to it. And what we kind of see with that is, a small little cult subset. I like cults, though. I like cults and companies. When it comes to culty companies, love it. Apple, love it. So I would love to see this cult kind of flourish a little bit more and grow a little bit more. And I think in the case that this company takes off, it really takes off. And same thing with Hippo. As it takes off, we get the big returns on there. I'm going to slowly allocate on that. Because I'll probably, if this company really does take off, I'll probably let it sit at about a 5% allocation, but I'm not going to let it run any more higher than that. With most of these, I don't have official prospectus or anything like that, but I'm going to try to keep most of these exposures below 10%. And make sure that I'm getting these nice exposures to this high growth innovation across the board. And so I pretty much covered my entire portfolio. I'm going to kind of keep the forward-looking expectations kind of dumbed down a little bit, because we will, of course, do updates on this throughout the year. If you were a contender, you could constant updates on this. And I said quarterly. We'll see. to what extent I want to go into detail, because remember, this is mainly supposed to be a feature that containers can experience, but I want to make sure that I also put something at the beginning of the year to maybe help give some education to people who are new and just getting into investing, and they're kind of curious like how you build a portfolio. Keep in mind that this is a high risk portfolio. This is a high risk, high return. This is a Cathie Wood style investment that I'm going for. But unlike pretty much every single massive investment fund, I do not hold Tesla. So I know that will probably be the biggest thing that people notice. GK and Cathie hold a lot of Tesla. So I think it's worth mentioning that they're also both selling out of those positions slowly, and that Cathie holds an Polestar, which is a really it's a big head scratcher to me. But when I'm also, I will also say that I hold no sentiment whatsoever when it comes to my allocations. I love Tesla. You don't see it in here. I have zero sentiment. So this portfolio could change dramatically. If pot stocks start to go literally to zero, I'll probably buy more. But let's say, because I don't think the industry's going anywhere, and I think the management teams are amazing. But let's use a different example. Let's say the metaverse companies start to do really terribly. Technology starts to take a downturn, and we see a big allocation into value stocks. I will immediately begin to pivot to that. If I see a big breath from the market into a cycle, and I'm lagging on that, but I'm not late to the cycle, you will see me make a pretty large allocation out of some of these stocks and into those. However, I am going kind of against the grain right now because I'm expecting the beginning of the year to be pretty bullish on technology. And even though that markets like to sell technology into potential recessions, historically technology always outperforms in recessions. So there's just that immediate reaction. I'm not even sure why that immediate reaction exists. I think it's because boomers are so habitual that they freak out when they sell things that they shouldn't, and then they have to panic back into them. But that is what occurs in the recessions. So that's kind of the explanation I have for that. I also kind of wonder, like, how bad is the beating that we take? And you also see that I still hold some cash. So I'm not happy about holding cash in my long-term accounts. I love holding some cash in my reactionary options trading account, which isn't purely reactionary. I shouldn't have said it like that, but I like holding cash in my options account so that I can be reactionary, is what I meant to say. But when it comes to managing a fund, I mainly want to have market exposure at all times. There's a lot of fears of market crashes because of inflation. I'll hold right through it. I expect some of these to also perform well with inflation, but stocks are the best hedge against inflation. Inflation causes equity prices to rise. To sell out of the stock market because of inflation is the exact opposite of what you want to be doing. Under no circumstances should you not have some sort of appreciating asset to offset inflation, especially when inflation is rampant. It's the absolute worst thing you could do is to hold on to cash. So when it comes to having a large fund, an investment fund, I want constant exposure to the market. When it comes to trading, I want to be nimble and flexible. So these are two different strategies, and hodl versus trade. So I think that about covered. Did you have any last things you wanted to comment on, Stephen? Anything that you missed? I think you about covered it.
Yeah, I covered most of it. I'll briefly talk about some of my Roth IRA positions, if anyone's interested in doing those, because this is very much a long-term. First one, V2, that's the Vanguard Russell 2000. So that's enough said about that. Uranium ATAI, that is a psychedelic medicine company. And so they kind of have a broader umbrella of companies underneath of them that work in a lot of different areas of psychedelics, as far as like MDMA, psilocybin, stuff like that. So it's just a broad. We already talked about that enough. PRNT, that is a 3D printing ETF. This is just another thing where we're going to see a lot of growth, I believe, over the long term, as far as like 3D printing things like organs and stuff like that. We're still unlocking this technology like every day. We're learning more things we can do with it. The other last one, not yet. ArcX, that's Cathie Wood's space exploration fund, And it's just one of those things I want to have exposure to. I mean, we don't really have a real winner in the sector yet because it's obviously not as widestream as it will be in the future. But it's one of those things I just want to keep my eye on for my retirement account. And then also Byte. This is a cryptocurrency mining ETF. So it's just one of those things I also want to have good exposure to in the long term. Any other comments I had were I'm not exactly happy with how my portfolio is allocated right now. I think I have some overweights in some areas and some underweights in other areas. That's something I'm planning on trying to balance out over the year. This is the first year I've actually really had a portfolio that I'm going into a new year, like holding a decent amount of stocks and seeing how they perform and how to shift them and how to maximize it. So I'll be learning a lot this year along with you guys, and yeah, we'll turn this into something great.
Yep. Well, that's why we call him the prodigy. Yeah, and looking at his Roth IRA, keep in mind like this portfolio is supposed to perform better than the S&P over the next year, which means it's gonna or at least the next few years. And this Roth IRA is supposed to just sit for the next 10 years. So notice the difference in how most of these are distributed across the market. He's done a really great job at that. This should look a lot different than these. So this is how you want to manage a retirement account. If you don't want to be someone who's an active manager and you just want to, there's a lot of people who have this mentality of I just want to buy something. I don't have to look at it. I just want to buy it and for it to go up for 10 years. Okay, well, that's your V2, or you could literally just put this S&P index in there. So that's definitely something for people to consider. Those are great things to touch on. So
yeah, it's not as aggressive, more just like this is what I'm going to pull out when I'm 50 and just going to let that ride.
Yep. All right. Well, I think that's
awesome.
I think we've did a good thing. I appreciate you being a special guest on this, Stephen. Your first special guest on the No Milk Trading YouTube channel. I hope you feel super special. We love having you in the Discord. Stephen's one of our refs. He helps manage the Discord. A lot of you probably have talked to him in there. We really appreciate everything he does. He's a huge help with research as well. He dedicates a lot of his time to this, and he doesn't do this full time like me. So he's really pushing the extra mile while he's deployed halfway across the world, not doing it.
Yeah, if you heard any alterations, it's because my Wi-Fi is not the best. But I'll be back home soon. Hope when I get back home, I will be in a much better spot to help producing more content. So you guys will definitely be seeing more of me. And we got some other things planned up in the future, like some shows where we'll be in there just getting more content out for everybody.
Yeah, so we're super happy to have him. We appreciate you, and thank you for checking out the video, guys. Please words are hard. Holy cow! Please go ahead, like and subscribe. Comment down below. What is your favorite stock heading into next year? What do you think of our portfolio allocations? Leave them down below. Let us know what you think. Maybe share the video. Talk to your friends about it. I don't know. Definitely look at the links down below. Join the Discord and say hi to us. As you can see, we're in a live stream right now. We're live. You could have been in here just listening along or talking smack. Whatever you want to do, we're happy to have you. Thanks for watching, and we'll see you on the next episode.